This podcast is made possible by VersaPay.
Hello, this is Aaron Hartwig, CFO of Edgewood Companies on CFO Thought Leader Podcast.
This is episode 889.
And you may have 25 different earnings reports that come out, and it's impossible for one person to go through and read all that. But if you can take, our amenity analytics or something like the work that ChatGPT does and say, here's the 10 things I'm really interested in. I want to understand sentiment. How did the CFO, what were the words that the CFO said? Last time he said these 3 words or she said these 4 words, what happened to the company, right? Are they signaling something, either directly or indirectly? And the amount of information that can be synthesized through with these models is really powerful, but it gives people more information on how you invest, right? It gives you better information on investments you want to make. And for me, these are, used the right way, these are all tools that help drive the investment process and reduce manual work that someone had to do at a point.
Hi, it's Jack. On today's show, we speak with Ben Chrnelich, CFO of Symphony. Not unlike many of his CFO peers, Ben Chrnelich's early career appears to have weathered no shortage of economic hijinks, thanks to the dot-com bubble of 2002 and Wall Street's subprime mortgage crisis of 2008. The opportunity to be at the epicenter of these events really allowed me to form my risk assessment as a CFO, explains Chrnelich, who was working for Lehman Brothers when the investment house collapsed in 2008. Unlike many of his Lehman colleagues, Chrnelich appears to have found a silver lining to Wall Street's economic turmoil when he was hired to be CFO of a technology company created by the New York Stock Exchange, known as NYSE Technologies. You'll hear that story and much more on today's episode. We'll begin after this. When your accounts receivable automation focuses only on back office tasks, you forget the most important stakeholder, your customers. VersaPay gives you all the tools you need to automate those tasks, plus the collaboration tools to take on everything that automation alone simply can't. This doesn't just increase efficiencies and accelerate cash flow, but also creates a dramatically improved experience for your customers. And as the economy tightens, can you really afford to risk losing customers over an invoice-to-cash process they find frustrating? With VersaPay, clients typically achieve 50% less time managing receivables, 25% faster payments, 30% fewer past due invoices, and 81% customer portal adoption. Learn more about VersaPay's collaborative AR, ERP payments, and cash application solutions at versapay.com/CFO. Hello, we're speaking with Ben Chrnelich, CFO of Symphony. He's also the president. Ben, welcome.
Hi, yeah, thanks. Looking forward to the podcast and appreciate the invitation to join you, Jack.
So, Ben, we always begin by asking our guests to look back for us. And what we're trying to do is identify where you were when you feel you acquired the skills and experience you needed to emerge as a leader and become a CFO. When you look back, what places and time come to mind?
Sure. Yeah, I was really fortunate. When I look back at my career, to have worked for some phenomenal CFOs early on in my professional experience. At Price Waterhouse, the partner I worked for, Dan Ryan, was a very business focused finance professional, finance partner. He eventually became the CFO at investment bank out in San Francisco, Robertson Stevens. And I went out there and worked for him, and it really drove the business value and the business understanding perspective of the finance and accounting world. And talked a lot about, we all have very strong accounting backgrounds. We can do debits and credits, and we can build financial statements and footnotes and all that. But the real value that you provide is taking a financial framework and a financial foundation and applying that to a business advisory role. And I'd say for me, early on in my career, he really pushed us as young professionals to not just be an auditor, not just be a accountant, but use that skill set to work with controllers and VPs of finance and CFOs and audit committees to help them really understand the story that the numbers were telling. And numbers being accurate, paramount, disclosures being on point, paramount. But unless you could actually articulate what that meant and how that would steer an organization's decision making, you weren't really living up to the full capability of a financial. And so for me, those kind of early career exposures of, you can be good at being a CPA and that will take you somewhere, but you really need to understand the business, the drivers, and the investments that people are looking to make and how you articulate the outcome of those.
I just want to point out, you make your career path seem so uncluttered, because you are part of this class of CFOs that spent the first decade of their careers, their career building, dealing with crises. I mean, you were at Robertson Stevens in San Francisco just as the dot-com bubble implodes. And 6 or 5 years later, you're at Lehman when it collapses. But each time you do, you land on your feet each time. Do I have that right, or how do you look at it?
Yeah, no, I think, and that's as a CFO where you want to be. You want to be in the turmoil, and for me, that's how you learn. And for me, what we're going through now as this kind of interest rate and banking phenomena in the market. For me, I'd say this is kind of my third cycle going through a pretty massive disruption. As you pointed out, Robertson Stevens, we went out there to help grow the business through massive technology innovation. At one point, and it's interesting, Robertson Stevens went from very low on the underwriting kind of leaderboards to I think the peak was the top 5 tied with Credit Suisse, and we were out there and we're like, how does this kind of small technology focused San Francisco investment bank, but there were all this innovation, all these ideas, all this capital that wanted to go towards building better technology for end users. Some of them were horrible business models with phenomenal technology. Some of them were really good business models with okay technology, and some of them were great business models with fantastic underlying technology. And the market had a really good way of sorting that out. Certainly some exuberance around it. I think sometimes that exuberance does drive innovation, does drive the excitement, and getting people really focused in there. But for me, the opportunity to kind of be at the epicenter of a lot of these events is something that really forms your risk assessment as a CFO. It allows you to see and process both sides of the cycle, really helps you acknowledge and understand where in the business cycle you are, and you learn a lot from it, right? And when everything is growing and deals are flowing and trading is active, sometimes the cash flows and the working capital and the balance sheet security and liquidity and risk management, those can take a secondary seat because it's just not forefront. But the second it turns, all of a sudden, the finance folks become some of the most important people in the room. And if you haven't been doing the work to understand the underlying aspects of the business, you're going to be in a really disadvantaged spot when you are called to talk about what's happening and help navigate a firm through that. So internet growth was one. Then we kind of got through that and went. So after Robertson, I was out in San Francisco. I came back to New Jersey and started working at Schwab Capital Markets. So and that was through actually a connection that I had made when I was in San Francisco at Charles Schwab. Had worked for Larry Leibowitz, who was CEO of Schwab Capital Markets, and really as an institutional brokerage business. So we were taking all the retail flow from Schwab's retail customers, bringing that into a separate brokerage business, and then trading that electronically with institutional flow coming from other firms. And for me, it was I was still relatively early in my career. I was given a pretty big team there to manage. Most of the people had more years of experience than me, and it was one of those things you had to just come in and kind of demonstrate. Hey, I know broker dealers, I know the regulatory environment, I know kind of how to think about the FP&A side. And for me, it was a really great opportunity to work closely with Larry, who was certainly a very well-known and respected CEO and operator in the electronic brokerage space at that time. We ended up doing a couple acquisitions and then selling that business to UBS. So UBS's electronic matching engine came from the work that was done at Schwab Capital Markets to build it, create it, and a lot of the foundation of their electronic trading platform came from that business. Once we sold it, gave me an opportunity to move over to Lehman Brothers, where I was in the CAO group, which is really kind of a business management COO type function. You work for the heads of trading, the heads of sales, in doing all their business management responsibilities and really advising them on how to run the business. And a lot of some of the smartest people that I've ever worked with were in that role. Risk management, client engagement, understanding how to build client relationships, all the data behind it. But they also needed, they spent so much of their time, risk managing a portfolio, looking at trading flows coming in, or client engagement, that they really needed somebody who could be their right-hand person to work through planning, analysis, understanding the numbers, HR issues, technology issues, right? All the elements that go into running a business. And for me, that was my first role where it was finance was needed, but it wasn't in finance. And I think on my second or third day on the trading floor at Lehman, someone said, "All right, well, you no longer have the close to worry about. So what are you going to do to make yourself relevant here?" And that kind of hit me in one of those ways where for a number of years, right, in a finance role, like you have the close, you have regulatory reporting, you have the audit, you have all these things constantly coming at you to keep you busy and give you relevance in your role. In my Lehman role, it was, all right, you have to figure out how to make yourself relevant in a very competitive world and understand and create the value that you can bring to your senior business operators. And Lehman was fantastic. For me, it was a very challenging role. It was early mornings, late nights, but just absorbing everything that's going on around. And we went through a very specific business transformation change of cash traded equities, right? Everything was voice, very kind of old school or kind of historical approach to trading. We spent a lot of time building out electronic trading infrastructure, introducing electronic trading to our clients, to the people at Lehman, adjusting business models and responding to the economics that were happening in the equities markets. And a lot of what I worked on at Lehman in terms of early stage investments in ECNs, ATSs, really led into the work that we're doing now at Symphony. So going through Lehman, Larry Leibowitz ended up going to New York Stock Exchange to be chief operating officer when Duncan came in from Goldman and took on the CEO role. And Larry called me and said, "Hey, I know we always kept in touch. We're looking to build out a technologies business. So we have a lot of technology that we think we can commercialize. It's a different revenue stream than the commission side of running an exchange, right? There's a lot of variability. If it's a lot of volume, revenue goes up. Lower volume, revenue goes down." And they were really looking to say, like, how do we take the technology assets that have been developed over all these years and start to monetize them and operate them as a technology business as opposed to just a core component of the New York Stock Exchange trading platform. At the same time, there were a number of companies in the space that had become pretty critical to trading infrastructure that NYSE as a business thought to make sense to bring in and acquire. So I went down to NYSE. Ironically, during college, I had interned on the floor of the stock exchange and worked for a specialist company. And that's kind of really what piqued my interest in capital markets and trading. And so it was a really interesting opportunity to go back to that kind of starting point in a different type of role. A lot of the guys that I worked for and people I worked with were still on the floor. And for me, it was that opportunity to make that transition into a CFO type role. And it was a newer business with lots of capital investment and support from NYSE overall behind us. And they really gave us an opportunity to create something from scratch. And when we started, we had a handful of small businesses. Over the years, between acquisitions, organic growth, and new business development, that we were able to get funded. We got that business close to a little over $500 million in revenue
Yeah. Hey, Ben. So when you arrive, you step into the New York Stock Exchange Technologies Company. Are you the CFO right away, or is it a role that you get advanced into?
Yeah, so I was hired as a CFO and CAO of NYC Technologies.
And how big a company was it back then? Was it really just beginning to take off, or what was its?
Yeah, we had a couple hundred people. We just bought an organization called Wombat. We had probably 85 million dollars of revenue at that inception point.
And this is 2008.
2008, yeah.
You look like you, what's the expression, fell in a tub of butter. Your nature is to look forward because you made it sound painless. And yet we know that you were surrounded by colleagues who, weren't as fortunate maybe as you jumped into the next opportunity back in 2008. But I'm still like, wow, he made it through without a scratch. I don't know how he did.
There's probably definitely some scratches there,
but you had enough of banking at that point, perhaps.
I had, I professionally, I knew I wanted to be on a CFO track, and it was, career-wise, I kind of had to make that decision of, do I want to stay in an investment banking role where it's a business manager, COO. I really wasn't on the sales side. I wasn't on the trading side. Or do I want to, and I've always had a strong interest in capital markets technology and the technology applications that drive capital markets. So do I want to use kind of the first, 10, 12 years of my career and the experience I was able to have, in core investment banking and trading, and kind of combine that with the CFO business operator role of running a company, providing and building technology to drive capital markets. And I've always had a view that technology innovation in capital markets will accelerate, will play an important role, and will continue to drive efficiency in capital allocation. And for me, there's just a real interest in being part of that process.
There's a whole, I know there's a whole sector that serves Wall Street, all types of technology companies, and I know that Bloomberg came out of that. Would Bloomberg have been a competitor of NYSE, or if it's different?
Yeah, I think for the most part, Bloomberg would be complementary to NYSE. Bloomberg really focuses on, so NYSE is the point that creates a lot of the market data, right? Trades happen there, and then all the data that's taking place in terms of pricing, liquidity, depth of book, indice performance, basket performance, right? All that's generated on exchanges like NYSE. Bloomberg consumes all that data, or buys it, and then takes it and brings it out to individual market participants. So there is, Bloomberg has some trading functionality, some ATSs, ECNs, other liquidity centers. But from an NYSE perspective, it was more of a kind of cooperative partner arrangement than it would have been direct competitor.
We're always trying to identify the different tracks that CFOs come up, but you came up sort of this information technologies track within Wall Street firms.
Yeah, definitely.
And very interesting. So we have you as far as landing in the CFO office. I interrupted several times, forgive me, but anything else you'd like to share before we jump and ask you about Symphony?
Yeah, I think, when you talk to, reference a couple of times, just the tumultuous times. I think if you're a CFO or someone that aspires to be in a CFO role, I always give the advice, search out the most exciting environments that you can be in. And really look for companies that have transformational change, put yourself, in the middle of that. And, those experiences are what form you, would help you understand different cycles and understand, the impact to financials from different points, in that business cycle. And scars are good, right? Like if you go through 10, 15 years and you don't have ups and downs and bumps and things that happen, you're just not going to learn, and you're not going to have that frame of reference as you get further on in your career on how to respond to disruptions in markets. And for better or worse, U.S. and certainly on a global basis, financial markets have disruptions. It's just the nature of that environment. And some people know how to navigate through it and kind of have the fortitude to get to the end point. Other people get too caught out from a risk perspective or leverage perspective, and unfortunately then can't survive through those downturns.
Well, we might have a few more career-related questions for you a little later in the podcast, but right now we'd like to find out about Symphony. I want to point out it looks like you arrived just as the pandemic was arriving in New York. That's a welcome mat for you. But I begin by saying, tell us about Symphony. What kind of company was this?
Yeah.
What does it do?
Yeah, so Symphony is a collaboration platform that connects participants across capital markets in a secure and encrypted environment across through multiple channels of communication. Can be video, it can be Zoom, it can be Teams, it can be chat, it can be 1v1 conversations, it can be group rooms, it can be file sharing. So you think of Symphony as, and we have about 600,000 users on Symphony, all across the investment banks, buy-side institutional money management firms, exchanges, market infrastructure platforms, and all the people that are part of the capital markets and broader financial services community. Many of those use Symphony as their communication and collaboration platform. So if you're a trader at Goldman Sachs and you want to talk to your counterpart on the leveraged finance desk at Barclays, you can use Symphony to communicate directly with them in a secure, verified identity and encrypted manner, right? The data doesn't, it's at your firm and their firm. And so really what we've done is, if you think of, the trading pits of, many years ago, where, everyone was together, or, email, or some of the other kind of lower latency communication mechanisms, Symphony has allowed people to communicate instantaneously, but in a secure and compliant environment that regulators and internal compliance says, like, this is a proper way to communicate, and it records everything from an archival standpoint. So the company was started 2014. Really was a group of the Wall Street technologists and Wall Street investors came together and said, we in capital markets need our own communication platform. And people had used AOL, they had used Yahoo, they had used other instant messaging, and I think everyone realized that relying on some of this non-regulated, non-structured, non-compliant technology was not a good way to go about communications around a trading environment. So Symphony was started then, and we've grown it over the past several years through a number of acquisitions. And the intent of Symphony is to continue to build out that front office collaboration stack that anyone who's involved in capital markets has an easy way to communicate with their community. And their community could be 10 people you work with every day. It could be thousands and thousands of people that you're publishing your research to. It could be counterparties that you want to exchange trade information or trade data with. Whatever is part of your daily process, you can usually accomplish that over Symphony, and then the other elements that are the content and applications that are on the platform.
The company mentioned acquisition. The company's been acquisitive during the pandemic, even. It was doing deals. Can you tell us a little bit about that environment and why perhaps it was a good environment to do deals? Or
yeah, and I started February 17th, so I had a week in the U.S. I did a week in our London office. I came back to New York, and then we did a practice day of, let's see what happens if the whole company works from home. And then we all worked from home for a really long time. So from we're a collaboration platform. The activity in the pandemic, was a tailwind and catalyst for Symphony, and people that were using it, in the office also realized that Symphony was the lifeblood of communication when you weren't on the trading floor or in the office with each other. For me, it really forced me to make a big investment in getting to know people, because you just weren't in proximity with individuals. I kind of rented my own office in my town, which is where I'm now. But everyone I met the first year was just over Zoom, right? And you just try to kind of figure out how you build relationships, get to know people, understand the business in a very different environment. But we didn't let that stop our business focus. We knew, coming into Symphony, myself and then our now CEO, Brad, I was hired as CFO, Brad was hired as president. Over time, Brad took on the CEO role, and I expanded my role to take on the president role. We knew we needed to grow the company, and there were a number of logical acquisitions in the space of entrepreneurs and businesses that had done quite well on their own, but needed a broader platform to expand their revenue, right? And for Symphony fit that really well, because we were technology that already sits inside the investment banks. We already had relationships with the buyers. We already had deployments through technology stacks, sign-offs by information security and compliance, and we're just a known platform in all these technology stacks at the banks. So bringing organizations into us, we could say to CEOs, "Hey, join us. We're going to be part of our journey of building this company. We're going to give you salespeople that can sell your product. We're going to give you presence inside the investment banks. We're going to give you the ability to market your product better, and also you'll wrap it around a very tried and tested engineering environment, deployment environment, QA environment." When you think of Symphony, we're a 24/7 system. We have hundreds of millions of messages a month that come over the platform. It's mission critical software for the trading environment, and the standards that we have to operate on are really, really high. So a lot of the firms that we look to buy, they said, yeah, that's an environment that we want to be part of, and that environment is going to help accelerate my specific product or solutions applicability and adoption in the capital market space.
Are you looking at the finance function upon your arrival and the steps you've taken to, get it in shape and add talent and maybe some systems yourselves? Are you making it IPO ready? Is this the path you're going down? Are you looking to get your reporting regularly, or what chapter is this?
It's a really, really good question. I've always taken the view, having worked at public companies for a while. NYC was obviously public. Lehman was public. Charles Schwab was public. I learned and worked for some great public company CFOs. And advice that I got was, no matter where you are as an organization in your ownership journey, your capital structure journey, operate as closely as possible to a public company as you can. Because the structure, the discipline, the rigor of reporting, the understanding of your numbers, and the ability to substantiate what you do every quarter and how you do it is critical. So even though, for me, Symphony is a private company, my previous company, IPC, was a private equity owned company, I've always taken the view with the finance team that we're on a public company cycle. Now, we obviously don't do Ks and Qs, but the level of the accuracy of our close, the audit, the reporting, the intensity that we put around the results, are very much aligned with a public company. I think for us, we're not in a rush to go public or have some sort of IPO. I think we still have a lot to do around a lot of opportunity around our product deployment, additional acquisitions that we want, and at some point we'll kind of determine if going public is the right thing. I think if you look at the landscape now, there are so many companies that rush to IPO that are just kind of dead money right now. Right? They weren't ready to withstand the rigor of public capital markets, nor do they have the multiple business lines, revenue growth drivers, and addressable market to grow into the expectations that a public company has. So for me, our CEO and our board, it's certainly something that is always an option, but we're not looking to rush into it.
What are the non-financial metrics then that new adopters, who's using the app, how long they're using it? What are you paying attention to make sure it's performing the way you want it to?
Yeah, so we don't see any of the data, like the actual, if you send a message to somebody, we would never see that you said, "Hi, how's your day going?" But we do see that you sent a message, and we see how many messages you sent. So I spend a lot of time looking at the vibrancy of our community and our network. So how many users are on? How often are they on? How many messages are going through? How many are internal within an organization? How many are external? How many are over a mobile app? How many are from one geography to another? Right? All the things that kind of point to the vibrancy and the network effect of our community is really important. And when we put out a new product, we look to see, all right, we deployed a new product. One of the things that we do now is compliant-enabled messaging, where you might have seen that a lot of the banks had some pretty serious, significant fines for bankers who are in a regulated environment using WhatsApp or SMS or iMessage to communicate with clients, which is a very natural thought, right? People use text to communicate. But they were doing it in a manner that was not being saved, searched, archivable, all the SEC rules that you have to follow. So now people are using Symphony to send messages into CFOs at corporates and high net worth individuals that they manage into their SMS and their WhatsApp. So when we deploy that solution that allows a regulated banker to use Symphony and then send messages, we're able to see, like, is that person frequently using it? Are they using it once in a while? And then it helps us, with training, with client outreach, with onboarding. Is there a what's going well and what needs to go better? So a lot of it really is around, like I said, the vibrancy and the activity across our full community.
Well, we always like to see if a finance leader has a metric that they have begun to pay closer attention to, that they have helped position in the company more widely, so people are paying attention more closely. Since you arrived, I'm wondering if there's a certain measurement that with your team you are able to raise the profile of. It might be just you began educating the organization about why we need to pay attention to this more, frequently, or look at it more daily. Rearrange a dashboard so something's popping in people's minds more often. I don't know. Anything come to mind that you could share with us?
Sure. Yeah. And there's and as a CFO, I've always taken the view of, I'm going to be very, very transparent with our organization. So we have about 600 people at Symphony. I do quarterly town halls where we go through our revenues, our product line results, our expenses, our investments, and then all of our operating metrics. And some CFOs would say, I'm not comfortable giving out that much information, or there's the risk of it getting out to the broader market. To me, especially in a technology environment, we work, like, our company is really high IQ individuals, very quantitative. They want to know what's going on at the company that they work for. And so part of my responsibility is to make sure we're giving information to them. And in doing that, but it has to be information that they can relate to. But no one's really looking at GAAP footnotes or revenue recognition. They want to understand, what am I doing? And then what are the metrics that are showing success or not? So I think the two things that we've really focused on are externally engaged users, right? So how many of our users are talking to somebody at a different company and how frequently, right? There's one element of Bank of America individuals talking within Bank of America, but then our Bank of America salespeople using Symphony to engage with their clients at the different institutions. Are the prime brokerage businesses at Bank of America engaging with their prime broker clients over Symphony? And for us, the more that we drive that external engagement, the more valuable the network becomes. The other thing that we look at a lot is we call it bots, so BOTs. They're really automated processes that happen on Symphony. About 75% of our bots are built by our clients. So they're able to use the Symphony platform, and we have a bot development kit, we have a software development kit, and they're able to take a lot of the manual processes that someone used to have to do. So you used to download a bunch of trades, you'd send them to your clearing corporation, they'd send an email back to you with the breaks, and you have to kind of figure out one by one. That data transmission, that data reconciliation, that data sharing can easily be done over Symphony. And we're always looking at the number of automated processes that are being run over Symphony, the number of automated messages that are being created, because for us, that's really what drives the stickiness of Symphony as an application. So if you're a trade assistant on a desk and you've used Symphony to automate 2 processes that used to take you 2 hours, the chances that you're ever going to say, hey, this is a platform that I don't need anymore and it's not relevant to me, are pretty low, because you can look at it and say, hey, I created efficiency in my job by using Symphony, and now I'm able to dedicate time to the other things that my trading team has on the docket for me.
Well, interesting talking about bots or artificial intelligence. It's part of the family, I suppose. Since the start of the year, Chat GPT is everywhere, it seems, and it's impacting everything. Can you tell us, within your organization, whether it's been part of the discussion, whether people have come to you and you've been surprised at the different conference tables it's been brought up and explored or talked about? Anything you can share with us?
Yeah, I mean, I think to your earlier points around my kind of different career experiences, I've been fortunate to be part of lots of innovation cycles. So if it was early web development of people buying products over the web, or figuring out Amazon how to deliver, buying something on the internet and then having it delivered to you. different financial instruments that were created in terms of how do we finance mortgages or give people better rates. How do we shift markets from a cash voice, very manual process to electronic trading, which has exploded in the terms of the number of securities that are traded, the liquidity in the markets. And I've always found that the people that embrace the technology really understand it and figure out how to use that to drive efficiency and value in their business do better than those that say, oh my gosh, we can't do this. It's going to be a real detriment to our business, right? Technology just throughout humanity, technology innovations just keep pushing forward and they find ways to make things better. Whether it was good perspective on our part or pure luck, about 3 weeks before ChatGPT really came to the forefront, we purchased a company called Amenity Analytics that does natural language processing, does AI work around earnings releases, is one of the more prominent analytics companies in the Wall Street space that's very tied into the type of work that ChatGPT does. So when our board was very supportive of this, and so we brought this company in and we're explaining to people, what it can do to data, how it helps people understand, the mass. I mean, think about an analyst on earnings day. If you cover the retail sector, those earnings all happen in a condensed period of time, and you may have 25 different earnings reports that come out, and it's impossible for one person to go through and read all that. But if you can take, our Amenity Analytics or something like the work that ChatGPT does and say, here's the 10 things I'm really interested in. I want to understand sentiment. How did what were the words that the CFO said? Last time he said these 3 words or she said these 4 words, what happened to the company, right? Are they signaling something either directly or indirectly? And the amount of information that can be synthesized through with these models is really powerful, but it gives people more information on how you invest, right? It gives you better information on investments you want to make. And for me, these are, used the right way, these are all tools that help drive the investment process and reduce manual work that someone had to do at a point.
Wow. Just would be interesting to see that all the individuals who gather around a table to be part of what you were just discussing. It seems like there's so many different perspectives in the technology world. I suppose that's the way it's always been, but somehow this seems just even more so as we all try to look forward, that it would take the collective intelligence of organizations to figure these things out. So that's wonderful. Thank you. I appreciate that. We're going to jump to our finance strategic moment question. This is where I ask you just to sort of pluck one instance of strategic insight that you experienced during the course of your career. It might have happened 10 years ago. It might have happened last week, but it's where you saw something, whether it was a risk or an opportunity you pursued, a risk you stayed away from. Don't know. But what comes to mind when we ask for a finance strategic moment?
Yeah, I think there's a couple that I could talk about. I think for me, the strategic moment was at my at IPC. We're private equity owned, very kind of intense operating environment. Hundreds of millions of dollars of investment in the company, and we were in the boardroom, and I was kind of giving a readout on the quarter, the results, and kind of what we're thinking. And one of the partners at the private equity firm said, "Okay, so what do we do?" And for me, it was like, okay, the CFO job, you have to be able to talk about what do you do. And it's not just, understanding where the revenue came from or, what products are growing, but, how do we position the company appropriately? And, in this specific instance, we kind of had 3 areas that we could invest in from a development standpoint. Some could have been around electronic trading, work could have been on the trader voice side, or there were some small acquisitions. And yet in that moment, you realize that an entire boardroom, right? There's 25 people sitting around there, spotlights on you. And these are MBAs from top schools and successful investors, and they're looking for outcomes. And to me, the moment of being able to articulate, here's what I think we should do, here's why, here's the market that supports it, here's my view on the investments that are needed to drive it, and here are the scenario outcomes that we could have. And it was probably a 25 or 30 minute presentation I ended up giving to that, or answer that I ended up giving, and we prepared for it. And they kind of looked around the room and said, yeah, that makes sense. Let's go down that path. And for me, coming out of that meeting, that it was one of the first times I felt like, okay, like I'm really like driving a business-oriented outcome that ties to investment and decisions, as opposed to you're just quote just the CFO that's giving numbers. And that ties back to kind of earlier in my career. I had the opportunity when I was out in San Francisco to meet with Chris Dodds, who was the CFO of Schwab. And I think I was 27, 28. One of the people I worked for Chris, and he had me go meet him. And I went to the top floor executive office at Schwab, most intimidating thing in the world. Went into Chris's office and sat down, and here he is, like Charles Schwab's right hand CFO, and we had a conversation. And one of the things that I said, so what do you like? What's your success? Like, what do you do? He said, every day before I go home, I write down what I got done that day, and it's 3 things that I did, and if nobody else did it, it wouldn't have gotten done. And he's like, and I keep that list over and over and over again, and I make sure that my days have at least 3 things that I did for the company. And he's like, and I'm not sitting in meetings, I'm not having phone conversations, I'm not reading things. I'm 3 things that I always say, this is what I got done today. And for me, that was it was one of those like kind of light bulb type things where you're like, you know what, like you have to deliver every day. You have to be part of the strategy. You have to be part of the operations. You have to be part of the customer conversation. You have to be somebody that is getting things done, not just adding up numbers, looking at reports, sitting, coasting through meetings. And I always look back at that moment of, it was a very simple piece of advice, but hearing that from someone who was so senior, at Charles Schwab, so senior in the industry, had been part of building, one of the most successful retail and individual brokerage firms and advisory firms out there. I view that as like a very strategic conversation that stuck with me for a long time.
Hello, and welcome to 60-Second Stories from CFO Thought Leader. The Goldman Sachs anti-raid team was between conference calls with its embattled company client when it received word that a key member of the company's management team had unexpectedly died. Looking back, Tom Fenimore says the next few months of his early career years at Goldman Sachs then became a transition point, or a period of accelerated learning. The client company, the target of a recent raid, asked Fenimore to join its team for the next few months and help the company complete a transaction that would fend off future raiders. You'll hear that story and much more on episode number 868, featuring Tom Fenimore, CFO of Luminar Technologies. Please join us and listen.
We're going to jump to what we refer to as our mentoring round. We'd like you to think back, and we touched on this a little bit, but the first time you stepped into a CFO role, which I guess would have been back in 2008, that first 30 or 60 days, again, it was the first time you had all the responsibilities fall on your shoulders as a CFO. And of course, this question's designed for new CFOs if you have advice for them. But what is it that you would go back and tell yourself? There was something you weren't prepared for. There was something that you wish you did differently, maybe that first year, that first 2 years. Don't know. What would you have told yourself if you could go back in time?
I think the first thing would have been, however much you think it's probably about 10% of that. And I think for any CFO coming in, there's a high expectation of delivering, understanding, and being part of what's going on. And there's sometimes the presumption that the CFO just knows. And it could be the title, it could be, where if someone looks at an org chart and they say that box looks pretty high up there, this person really must know a lot. I think having the humility and the self-awareness to just start asking lots of questions and not being too concerned that my title's CFO or I'm supposed to be an executive, but I'm going to sit down and really understand the unit economics of the business. How do people sell? What are the points that salespeople make about the product? And as I started going through other CFO roles, the first thing I would do at a company is sit down say, who's the best salesperson here? And I'm going to sit down and pretend I'm a client, sell me the product. And I'm going to ask you all sorts of questions. And the amount that I could learn from that was phenomenal. And I think early on in my first CFO role at NYC Technologies, I jumped into the numbers and the financials and all the things that I was very comfortable with, right? Things I can navigate really easily. It was probably doing better than most people. And I was like, this is a comfort zone. And it took me a while to realize, like, if you want to be effective, you actually have to get out of that comfort zone and understand the business side of it, right? Can you sell the product? I think I had a couple of months in, I was talking with a client. We were at a dinner and I said, so, tell me about this product. How's it priced? What does it do? How does it work? What's the implementation cycle? Da, 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 da. I'm like, I actually don't know the answer to any of this. I'm like, how am I the CFO of this company? I don't know these answers. And, it just kind of hit me that, and I give that advice to people that are going into CFO roles is understand that sales cycle, understand the product solutions, understand the workflow that goes into it, understand, talk to the engineers and see what they do. Because the numbers are just a manifestation of all the work that takes place and the decisions that happen on the front lines, and then the sales conversations and client experiences. And if you're just spending too much time staring at numbers, you're really not going to understand the drivers of the business.
We always like to ask our guests to reflect a little bit on the personal side for us. We're wondering if you have a personal habit or part of a daily routine that people remember you for. There's something you do a little differently, maybe. Maybe it's something a family member would point out to us. He's always done it that way. I don't know why. Anything come to mind when we ask for a personal habit or a routine that you have?
Yeah, I mean, I'm an early bird, so I'm up super early and try and kind of I always like to get a lot of things done early in the day. And most people would say, like, whether it's working with our team in Europe or other spots of the world, like I like to be up early and just start getting after things and talking to people. I always say, like, I'm very serious about what I do, very serious about my company, very serious about the people I work with. But I also try not to take myself too seriously. Like we're all here, we're working together, we're a team, we're part of a group that's trying to go after an objective of building an organization. But you have to kind of realize that in the whole scheme of things, there's lots of really important people out there that are doing things of doctors and nurses and teachers and individuals who are truly having massive impacts. And us as business executives and finance executives, have a very important role to play, but also like keep some perspective. So I think people would say I usually do a good job of keeping the perspective of what we're trying to do, and hard work. Right, I'm a firm believer in grinding every day, and I think one of the things I learned a lot, especially working in the investment banking world, is if you're going to try and coast, it's eventually going to catch up with you. And so it really is, the sum of what you do every day that adds up to what you accomplish, right? It's not one big moment. It's not one big sale. It's not one big acquisition. It's day in, day out. What are you getting done that's moving you closer to that goal? And I talk about delayed gratification all the time. If you're a CFO, be comfortable with delayed gratification, because you're going to have a lot of really bad days, and you're going to get bad news, and you're going to get unfortunate circumstances. You get customers that don't do what you want them to do. And employees are people; they're not robots, right? So people take off, they get sick, they can't deliver in a certain way. You can't deliver in a certain way. But if you focus on that longer term objective and you're comfortable with waiting to be really satisfied for a period of time, you can usually get to that goal and enjoy the benefits and the satisfaction of all the effort that went into the outcome.
What about a book selection? Would you have anything you can share with us? It might have influenced your thinking in business, or maybe not. Maybe it's just a book you escape with.
So there's a book called Numbers and Narratives, and it's by Answat Damodaran, who's a professor at NYU. And the first time I read it, I was like, I think this person's just speaking to me, right? And he's a phenomenal. I mean, he's one of the most renowned professors in the world. I've taken his classes online. I've read everything I can on him, and he's just truly a remarkable corporate finance specialist, professional teacher. And his book, Numbers and Narratives, really talks about like how do you communicate numbers to most people. And in your regular life, you don't talk in numbers, right? You don't go out to dinner and say, I'm going to have the $17.99. Or, I'm going to, please order me number 4 off the drink menu, right? Like you explain things. Like I would like the chicken parm and I would like soda, Coca-Cola with it. But there's numbers in math that supports all of it. And in his book, he really goes through, how do you understand what numbers are telling you, but then translate that into a language that most people can understand. Because in business, you have people that are technologists and you have people that are marketing background, sales background. right? There's not a lot of CPAs, MBAs that are hardcore finance people, and no one really talks that way. And I remember reading his book, and it totally changed my perspective on how I articulated things and how I thought about communicating financial results out to individuals.
Excellent. I don't think we've had it before. Surprisingly, it seems right in line with our listeners. All right. Well, we are up to our final question, where we ask you to look forward finally, and we're wondering what your priorities are as CFO of Symphony over the next 12 months. Yeah. What would those be?
Yeah, it's an exciting 12 months for us. We're still in acquisition mode. So there's several acquisitions that we're working on right now. So getting at least one of those closed is a big priority. We have a number of new products coming to market, and so in our trader voice and trader communication space, we're working with 5 or 6 of the largest financial firms and trading firms in the world to deploy this product into their trading infrastructure. Which for anyone that's in the trading infrastructure space, touching a trader's infrastructure is just sacrosanct. Like if you mess up something that a trader's used to using day in, day out, she is not going to be happy with you. They come in and they want to hit the buttons that make things happen, and they don't work. So as we're deploying a lot of this new technology, we're being really cognizant of the environment that we're working in. And then for Symphony, we're on the path to profitability this year, which is a really exciting outcome for us. We were early on very much in investment and build mode. One of the goals that I had coming in was to get the company to profitability. Brad, myself, the rest of our executive team have been really focused on our revenue growth, but also being really thoughtful on our investments and expenses. And so we're on track for the back half of this year to hit that metric, and that's something that the whole company's going to celebrate. It's been a company initiative, a company goal. And it's right in the line of sight. We're not quite there, but it's in that delayed gratification. It's close enough that we can see it.
Ben Chrnelich, thank you for joining us on CFO Thought Leader.
Thank you very much. My pleasure.
Hello, Thought Leader listeners. As you have perhaps already heard or even seen, we're now featuring the career lessons and moments of strategic insight shared by our CFO guests as Thought Leader videos. You can now find these videos on our blog at cfothoughtleader.com and, of course, our newsletters, but also on LinkedIn. If you haven't already, please go ahead and follow our CFO Thought Leader LinkedIn company page, and you'll be certain not to miss a single Thought Leader video debut. CFO Thought Leader, the #1 thought leadership platform exclusively for and by CFOs. As always, thank you for listening.